Ladies and gentlemen, welcome back to the channel. We do have some pretty interesting news to share with you. Late tonight, I wasn't actually planning on making a video. I don't know if you can see, I'm kind of red. The sun out here in Michigan, I guess, was kicking a little bit today. But nonetheless, there are some things we do need to discuss, including the sell-off in Tesla stock and some breaking news coming out here in extended hours trading. Hit that like button and subscribe to the channel if you have not done so already. If you guys want to come trade with us live in real time, every time I make a trade, I send out alerts, but that's not what the value is in that community. The value in that community is getting access to the hours and hours and hours every day of due diligence that I and other members do on smaller cap companies. On, let's put it like this. 98% of small caps are garbage and you should never own them. Okay, they're just not great. 2 to 5%, I'll give it 5%. 2 to 5% are pretty good. Like 2% to 1% are really good. Those are like your 50x opportunities. We are looking for the 50xers. It takes a lot of work, but it's possible to do. And that is the service that we are providing. If you guys want to come check it out, give it a month, try it out, check the link out down below in the description of this video. We have made quite a few trades recently and longer term investments. These are not really trades, they're longer term kind of horizon, 6, 12, 18 month kind of trades. Check out that link down below in the description of this video and let's get started. So first and foremost, before we get into some of your breaking news, some of the more pressing issues, Micron's Q3 adjusted EPS came in at $1.91 versus $1.60. Revenue at $9.3 billion, tops the $8.87 billion estimate. Q4 outlook sees adjusted EPS at $2.50 and revenue at $10.7 billion. Gross margin at 41%, projects 15% sequential growth. Micron is one of those stocks that is kind of in that AI race. It's not like an NVIDIA, it's storage, right? It's memory. So a little bit different, but in that AI space nonetheless, and they just blew away earnings. I mean, this was a pretty good beat. And as I've said before here on this channel, I do think a kind of super cycle, if you will, is coming for AI. I think a lot of euphoria is coming for AI stocks. I think Wall Street's going to realize, hey, if the economy is not growing too much, if people are still under pressure, people, the consumer, they're not spending as much, like things are good or okay, but they're not great, then where is that growth going to come from? Where is all of the investing coming from? It is in AI. Whether you are Target or you are Salesforce, okay? You are investing heavily in AI at this moment because you cannot afford not to. That's the fact. So while companies may fire people, they may, do this or that to offset tariff, protect margins, blah, blah, blah. They are sparing no expense when it comes to investing for the future and investing in AI. That is the area you want to be in. There's other biopharma names. I think that's a really good area to be in as well right now. In specific names, we have taken a couple of those trades in the trading community, but I think a big focus that investors need to have is AI, and that bodes very well for Tesla because I think Tesla is going to be the epicenter of this AI rally, this AI euphoria that I see over the next 6, 12, 18 months or so. Now, U.S. Envoy Witkoff says, we think we will have big announcements on countries that are coming into the Abraham Accords. He says it is a red line if Iran tries nuclear enrichment again. He says it will require robust observation of Iranian nuclear action. Now, U.S. tariffs will begin again on July 9th after a 90-day pause. It looks like we're probably going to get Trump that extends this again because probably part of what happened with the Middle East that was not top of mind for Trump and for a lot of people is getting trade deals done. So logically, you're probably going to see an extension here. And I don't know if that's going to be good news at this point, but I know it's not bad news to get an extension of the tariff pause. Now, apparently Netanyahu is going on trial in Israel, and Trump posted on Truth Social about this. Trump is calling on Israel to cancel Netanyahu's trial immediately. Trump says now it is going to be us that saves Netanyahu. He says that it was the United States of America that saved Israel. Now, here is the big news that I really wanted to share with you today. Trump is considering revealing Powell's predecessor or successor by September or November, according to the Wall Street Journal. This is big news. Let me tell you why this is big news. Because Wall Street is forward looking. So let's say, okay, let me start here though. I think everyone expects we're going to get more cuts from the next Powell predecessor, okay, or successor. But if we know who that is and we kind of have a background of, you know, what they're like, and maybe we hear a speech from them or get some comments from Trump around what to expect, that gives the markets a little bit of clarity and guidance. That gives the markets, like, sure, of course, we're expecting more cuts from a more dovish Fed coming next year, but it's putting it more in stone. It's giving the markets a little bit of clarity, but also giving the markets a little bit of a guidepost to go off of, okay? Let's imagine this. If we had a Fed right now that said, hey, we're going to cut rates 8 times next year, the equivalent of 2 percentage points, roughly where Trump wants. I think the markets today would react very positively on that. I think you'd see a little bit of those animal spirits, if you will, coming about in markets quite a bit. Say hi. Say hi, guys.
Hi, guys.
Say, I'm eating French fries and being bad. Say, I'm eating French fries and being bad. Yeah, oh yeah. Say, I'm bad, baby.
No.
And I actually think when Powell's successor is announced, it will also kind of mean like less of a focus on Powell and the current Fed. It can kind of become like a dynamic where we don't care what the Fed does. Like, the markets don't care. Like, we may not even react to the Fed's actions throughout the rest of this year if we kind of know what to expect for next year, because by about midpoint of any year, it's not about the rest of that year. It becomes about the next year. And this market is slowly becoming about next year. Why do you think stocks are almost at new all-time highs? Not because of this year, but projected for next year. I think Wall Street's projecting 4 or 5 cuts next year, probably, if I were to imagine what's happened with markets. Anything more than that, I'm sure is going to be seen as really positive. And then let's kind of be honest. I think Wall Street's probably in line with the dot plot, which is even less cuts than that. Okay, over between now and, you know, the end of 2026. So getting a new Powell successor actually announced, I think could actually be the next leg of this market if it's not from the economic data coming out this week. Now, let's also, before we move on from that and look at the data coming out tomorrow morning, let's just clarify. I mean, Tesla stock sold off today, down 3.79% in regular trading, down 0.35% in after hours trading. You did bounce right off of this trend line that I've had marked on the chart for a while now, which I do think is worth mentioning. You bounced right at that level, retraced to the upside. That low was at about $320 per share. You ended up closing in after hours, including that, at about $326.40 per share. I think you really want to get above the 330 level again. But nonetheless, the stock sold off today because of some bad delivery numbers out of Europe. At least that's the only thing that kind of was negative that hit the headlines today. This is not something you want to run away from. This is something you want to embrace. You want to embrace Tesla stock if it falls from here, because what it's really about over the next 6 months is not deliveries. It's not about Europe. Europe is the 3rd most important market for Tesla. It's not that big of a deal, especially if it's only down like 20, 25%. Like that's nothing. What really matters is robotaxi and scaling. What is Tesla's plans in scaling the robotaxi? That is what matters for Tesla stock. Nothing else at this point matters unless there were to be like, you know, a freaking bomb goes off, like a factory like Giga Berlin or Giga Texas, like the whole thing blows up or something. Like something dramatic would have to happen from a delivery perspective that is, you know, that hasn't happened to really have me concerned about deliveries. Like I don't care if we're negative this year. I don't care slightly negative this year on total deliveries. I don't care if we're break even or a little bit of growth this year. I could give a crap less. It's all about robotaxi and plans on scalability. Tie this back into getting a bunch of Fed rate cuts the rest of this year, really in 2026, and tie this back into a no or low inflation environment, a pretty strong economy. Tying those together, whenever you have really low inflation, pretty strong economy, and the Fed is cutting rates a lot, you do not want to bet against your high beta stocks, your hyper growth stocks, which is Tesla. Okay. And then add on top of that, the AI aspect of Tesla, and be it that AI is really the main growth driver in this market. Do you really want to bet against that setup? Probably not. So things can happen from day to day, week by week. But this is one reason why I'm steadfast in my target for $600 per share by the end of this year. This is really, again, in my opinion, not the time you want to run away from Tesla. This is the time you really want to lean into Tesla if we do get some weakness in the stock in the short term. Now, again, it looks bullish from a charting perspective, like nothing has changed. You've kind of consolidated, traded, up and to the right, at least a little bit here over the past week or two. And anytime now we could see a larger rally. But I think Wall Street really wants to see, what does scaling look like for the robotaxi? That's the big question we have. Whether it's 2,000 robotaxis next year or 40,000 robotaxis next year. Those numbers make a hell of a difference for where the stock should trade today. Now, in economic data coming out tomorrow, you're actually going to get durable goods orders month over month. Now, this is very important in, again, judging the strength of the overall economy. Last month was negative 6.3%. We're expecting positive 8.5%. The more positive, the better. What I'll tell you now is you really want a number that's just above negative 6.3%. You're going to see a revision to this coming tomorrow. So you really just want a number that's higher than the revised number. Okay, whether that number is revised worse or revised better, you just want to see a number that's better than the previous month's number, because that would mean positive growth. Now, as of now, you're expecting about net positive 2.5% growth or so, 2.2% growth or so. Anything better than that is obviously going to be good for the markets. Now, GDP growth rate quarter over quarter, final numbers for Q1 are also coming out tomorrow morning. Wall Street's expecting negative 0.2%. There's a chance this could actually get revised to negative 0.1%. I don't think you're going to get a revision to the upside, because the first number we got was 0.3% negative. Second number we got was negative 0.2%. If anything, tomorrow, you're going to get a negative 0.2% or maybe a negative 0.1%. A 0.1% negative number would be seen as positive, that maybe we were not as recessionary in Q1 as some people previously thought. Now, initial jobless claims will also be coming out tomorrow, expecting about 245,000. Last week was 247,000. So I think that could be important. A couple Fed speakers as well. Fed Hammock that I see right off the bat, Fed Barr and Fed Kashgari will speak. I believe this will be the first speech from Fed Kashgari since the Fed meeting. So it could be important. Pending home sales month over month and year over year, as well as what looks like here, if I've seen that correctly, a 10-year bond auction, 7-year bond auction that will be coming out. That's, again, in the mid-range of kind of short-term, kind of long-term. Bond auctions can be important and move treasuries, which can move the broader markets. Now, heading into Friday, that's when you have your core PCE number, and that is a critical number for this market. Obviously, the lower, the better. If it comes in high, that's obviously not great, but nobody's really expecting that. And I think we may even come in at like a 0.0% number instead of the projected 0.1% number. And that would just show, like, literally we have zero inflation. So again, I'm optimistic over the next 2 days that we do hit a new all-time high in markets. Today was a bit of a slow day. Wasn't too much going on, but tomorrow the pace is definitely going to pick up at least a bit. So let me know what you guys think about this down below in the comment section. Let me know what you guys think about Trump announcing Powell's successor. Does it make sense why markets might look at that and say, hey, forget what Powell's doing, because in a couple months we're going to have the successor, and let's imagine we hear that he wants to cut rates many times, like in line with what Trump wants to do, which I imagine that's what the successor is going to want to do. And my opinion is that's going to be really good. And I think we probably care less about what the Fed is currently doing and focus more on what the Fed is going to do into the future. And I think that can really help be a positive catalyst for markets. So again, let me know your thoughts down below in the comment section. Check out that link down below in the description of this video for the trading community. Have a great rest of your day, and I will see you in the next one.